As we have seen, transactions are first recorded by accounting personnel as journal entries. But where did they get this information? They get it from source documents. What are source documents? They are business paper that shows the nature of a transaction and includes all the details of the transaction needed for accounting. The accounting department receives these business papers from other departments. Almost every accounting entry is based on a source document. A company needs to keep source documents on file. They are used for reference as well as for correcting errors. Also, they are used by auditors as proof that accounting records have been prepared honestly and correctly. Now let's take a look at some source documents. First of all, a cash sales slip. A cash sales slip is a business form showing the details of a transaction in which goods or services are sold to a company for cash. As we see in this example, we have the letterhead of the company, the date, the detailed information regarding this particular sale, and the total amount of the particular sale. Many copies are made, one for the customer, one for the accounting department, and one to keep on file. Now let's look at the accounting entry. We are going to debit the bank account $35.90 and credit the sales account. Now let's look at a sales invoice. Many businesses do not deal with the general public and therefore do not have cash sales. Businesses of this type make nearly all of their sales on account. For each sale on account, a sales invoice is issued to the customer. Therefore, a sales invoice is a business form showing the details of a transaction in which goods or services are sold on account. As we can see in this example, we've got the name of the company to be charged, the letterhead, a date. We have how many days until the payment is due, or if there's a discount. As well, we have the details regarding the particular sale and the total sale. There are also many copies. For the accounting entry, we are going to debit accounts receivable and credit sales. Another source document is a point of sale summary. It is generated when a credit or debit card sale is used as a method of payment. As they have a point of sales terminal, this allows a computerized sale to register and the business and the customer exchange funds electronically. A point of sales terminal records these transactions and will create a point of sale summary at the end of the day, as you can see in the example on the left. For the accounting entry, we are going to debit the bank and credit sales. Now let's look at a purchase invoice. A purchase invoice is a business form representing a purchase of a good or service on account. In the example on the left, our company has made a purchase from General Engineering on March 6th, and we have 60 days to pay. This explains all of the service rendered for our repair, and the total is at the bottom. For this transaction, we are going to debit equipment repairs and credit our accounts payable to General Engineering. A check copy is a document supporting an accounting entry for a payment by check. Checks may be issued for many reasons, such as cash purchases, wages, owner's withdrawals, and payments on account. If the check is made for a cash purchase, a bill or receipt is also needed to support the accounting entry. In this example, we have the date, the payee to whom the check is issued, the amount in numbers and in letters, and the signature of the person writing the check. We also have this tear-off portion that explains the sale and number of copies. The original is sent to the payee of the check. For this accounting entry, we are paying off an accounts payable, so we are going to debit accounts payable and credit bank. As checks come in from customers, they must be deposited in the bank. Since the checks themselves cannot be kept to support the accounting entries, a cash receipt daily summary is created. A cash receipts daily summary is a business paper that lists the money coming in from customers. In this example, we see the cash receipt daily summary for March 9th. A. Baldwin is paying on account, which means he is reducing the overall balance he owes instead of paying a specific invoice. F. Perry is paying a specific invoice, and Pier 10 Marina is paying 2 invoices. Our accounting entry will debit the bank our total amount of $2,142.24 and credit our 3 accounts receivable. Bank advices occur when the bank itself initiates a change in the bank account of a business. A bank debit advice is a bank document informing the business that a decrease in the has been made in the business's bank account. In this case, we have been charged interest on a bank loan. For the accounting entry, we are going to debit the bank charge and interest account and credit the bank account. After reviewing these different source documents, we can see that there are additional documents such as receipts, bills, email invoices, insurance endorsement certificates, written memos from the owner, bank statements, and cash register tapes. If you turn to page 192 in your textbook, you will see a very good summary of all the source documents you need and a description of those source documents and the corresponding journal entry. If you have any questions, prepare them before you come to class, and we will be going over some review questions and exercises in class. At this point, you should have a better understanding of source documents and their corresponding transactions.